Welcome to TradeTheNBA.com. This is John. This report is for the 7th of February. Well, after the dip, we had, continuation lower down to the 38%. That caught plenty of support and rose significantly from there. We're still seeing white leading, but as I pointed out before, yes, we had the cross the magenta, which also presents the weakness, but we needed to see that dip either below the 25 or below the yellow. In this case, yellow pivoting up. Contraindicator in that particular case as well. We had the cyan shorts moving higher than midterm buyers, and potentially a leveling off of our DOC red, already shorter histogram. It should present weakness with a bit of a mix. If we see magenta picking up, then I think we can expect more of an upside tilt. I think probably going to just get a lot more back and forth until things begin to clarify some. Of course, you had those numbers on jobs and that, but now that's not looking so positive as they're being widely criticized since they decided to go ahead and adjust numbers all the way back to 2017 in order to get to the numbers they arrived at, and it was just massive seasonal adjustments, which means fake numbers. But then again, that's been the case for a long time now, since 09 at least. NQ dipping back lower below its 23% before it caught the action, and then it flipped back up. And again, almost identical reading from an MBI and DOC standpoint. So we get the consistency there, they're just in different ranges. Even the shakeout performing identically. From a gold standpoint, it's right at that 50%. We would expect it to continue to move higher. This is all perfect readings for a positive upside move. I think Michigan short-term buyer spike above with steel would be all it takes to break out. Once it gets above 50%, I think you'll see a lot more action. This is an indication that they believe that the Eurozone is going to take more serious action on inflation than the U.S. will. That would flip things. It hasn't happened, but this is the anticipatory kind of effect. Plus, they seem to be moving in some areas away from lockdown policies towards opening up, and I think it's just a result of what happened in the U.K. They really don't have a choice because much like in America, where Florida behave differently, the outcome economically becomes significant, and the disparities widen up. But that isn't going to change some of the supply issues as well as the energy issues in Eurozone. So these are all on positive extremes, so we would expect them to retrace when we get negative signaling, or at least a fade of the upside momentum. From an oil standpoint, it's just getting brutal. And the longer it sustains itself, like we've talked about, these things begin to have forwarding effect, 4 or 5 months down the road. So, we had this slight reprieve that took place in December, but began to fade quickly, and it's going to start having its impact, from this earlier bounce in March and going into April, May. So the spring is just going to be out of control inflation-wise, and here's something I promised, that the TLT would continue to fade and break the lows, and sure enough, there it did, because the market is sensing the realities and pre-preparing for it, as it always does. It's ahead of the curve. Bitcoin was fun from a interesting standpoint, because we had made new lows. Magenta finally got above, that became the buy, and moving across fairly decent, and then it had a little bit of a retrace and immediately pivoted back up, and we've talked about that. It becomes the reversal. Very low volume on the move, all positive extremes. So on a turnaround, it's probably going to be swift back to the downside, but we've been talking about this range between 34 and 39 for quite some time. And interesting, it behaved rather reasonably, just very quick, because it was on very low volume to do that, and that's some of the illiquidity that we've been seeing recently. I did have someone ask a question about retraces and projections. Pretty straightforward the way I look at some of those, without having to get too complicated. Merely taking the move from where we would have our turnaround buy set up, and measuring the distance of that move. In this particular case, you can take it all the way from the 0% if you want, all the way to the peak, and in which case you'd be at 36 to 38. What I look for in those particular types of setups is a 50% retrace. If you get to a 50% retrace, then you expect above the high to get anywhere from 23 to 38% Fibonacci from there. If you get a retrace that's above that, meaning that only comes back to 23, 38% and then turns around, then I expect a similar move, 100% of the first move. And so you have a situation where you have the 36 moves up to 38. So you would expect from that 38 another 2,000 tacked onto that. Which in this particular case would, from the high there at 38, you would be at 40, which this is slightly capped it, but that's generally how that works, and it's an easy method because it's kind of what institutional guys will use because they're looking from a broader standpoint. They don't need to get into the specific details of that. We can obviously be tighter within those setups because we can get a sell signal within them and know which ones have a higher likelihood of retracing early on. But that's where you'll see a lot of times where I talk about it, particularly on the ES and the dailies, and that when we break into a new high or like a new century mark, so 4,600, I'll expect to go to 46.23, 25 range, and a little bit further than that, you'd move up towards 33 to 38. So those are just Fibonacci levels rising from there, and then usually you look to see what happens at those particular spots, because at the 23 is usually when we get that fade back to match the highs at the century mark or slightly below, and particularly becomes relevant if we have algo activity at that particular spot. ETH, it's just so easy with this, with the green, brief break as it came down, but turned around beautifully with the cyan and the red right there. That was a beautiful crossover, and that took off from there. Did a slight retrace, and here's kind of that fitting setting. I mean, you could take that as a little bit deeper, but right on our Morganacci 50%, and boom. And that's kind of why it's effective that we have with our Morganaccis, because we typically look for these ranges where we have price dipping below or above when it makes those flips, and we usually look for rising lows for price to be drawn down to, as it did here. It started to pull towards it, but then it flattened out as the new buy came in, and then we get new highs, and then we look for that compression that builds where they get to be too tight of a range, and you expect volatility breakout, and we usually just say go with the volatility breakout. It was pretty straightforward. So you can see we had quite the move hitting lower, and then it was middle part of the day that turnaround came. It actually was a little bit earlier. Right here would be your earliest move, but I like to see the blue cross the gray setup in that particular case, along with magenta leading, becomes a much stronger setup, particularly when we're below the 50%. And that sure enough was good, but then late in the day, we caught a pretty significant sell. This is what it looked like from the 5K chart. It was very clean. So was the buildup right along a series of P2s, which is just higher red pivots. You can see the series of them starting from here. This one was higher, then this one was higher than the previous one. So you got 3 consecutive builds, pretty much holding on to price, and then we have the turnaround in DOC with the orange dipping, and then we also had magenta flip underneath here. Things went a little bit flat midway through there as we were at the peaks, and so we didn't get much of a rotation until a little bit later. We started getting more of the white peaks, and we'll see this sometimes where white peak goes this dramatic, and I usually expect to move to the zero, but you can have that temporary divergence, which this was very tiny, relatively speaking, when you consider these peaks were right around 44.80 and jumped up to 44.90, and that's within that 8 to 12 points that I mentioned can take place. But then white took over at the same time. Right here, DOC spread. So DOC spread along with magenta moving to below 25 and under yellow and fading, and it's usually a pretty good course. Took 3 bars for it to just break down and just clean all the way straight to the bottom. And that's where it happened. We started building across on the bottom. We had plenty of white leading, but all that, since you're already below 23%, really not that far to go. So this is one where I see these, I literally am looking for an entry that's towards the 23%, just because it's just not a whole lot of range. Now, there are times where sometimes the distance between the 0 and 23 is significantly larger, but this wasn't the case. And magenta crossed above it early, right at this base. Then by the time that blue became over, white was over, so it's one of those kind of hold setups until that magenta, so you get just a little bit later, but I mean, it didn't matter because it became a powerful move. We supported off the 59 algo, moved up to the next level in the 68 range, and once we got to the 85, we were clearly in the lead with magenta from there, and that's just where it kept blowing up until we got late part of the day, and people said, I want to take profits, because all of this going right back to here was positive extreme, and guess what? Filled it all right back in. And that's the beauty of a mean reverting market, which this is a bit more of normal behavior for the S&P. Just annoying a lot of times when they'll do it after market kind of setup or after the close. You get the final tail off, but still overall clean signaling, nothing to object about. Keep posting relevant details, any other questions on the Skype chat, happy to share them. As always though, trade well, talk to you later.